So today was a very lucrative trading day where you could have banked both ways in terms of trading SPY. I ended up playing for the gap that was waiting to fill above at 415.74. On the small spike this morning when it hit 414, I bought the same day expiration at the money calls 414 strike. Those went up 60% within less than 10 minutes. I locked in, averaging a return of 40%, which brought my portfolio up 10.5%. After that, I aimed for some smaller wins, just some quick scalps, not at the best prices, very quick in and out like a sniper. Made 2 more wins, 10%, and then I had a small loss on the calls as well. Unfortunately, I did not play the put side, which was actually the most generous opportunity of today. But still, the portfolio is up 11.75%, and I got to give credit where credit is due. And I want to give a big shout out to G-Roar within the chat. Because, not only did he recognize that this was a gap close reversal as SPY double topped at that previous closing price at 415.74, like we said in yesterday's video, if it reacts as a resistance, which it did in the morning, and it sold off hard almost to the lows, then it ripped back up, reacted as a resistance again, forming lower highs and got absolutely annihilated. G-Roar ended up taking advantage of that lucrative opportunity, buying SPX put options. And I believe those puts went from 480s all the way to $2,800 within about an hour to 2 hours. He absolutely crushed it. He made over 15 million on the day using the gap close reversal strategy. And of course, using what he uses. He also, follows the VIX. He uses his price action analysis, his technical analysis, and he also uses the VWAP, right? He uses a couple different things as well. But I want to give a big shout out to him where credit is due because he identified the price action and he recognized that it was going to be a micro bull trap. So with that being said, I'm going to show you how to trade the SPY both ways. I'm going to continue to update with you on how to trade the best setups at the best prices. As of now, I'm not seeing too many lucrative opportunities with the stocks. I've been absolutely killing it on the SPY as of lately. My trading has improved drastically just on SPY alone, and I'm really starting to love the SPY again. I'm finding it highly predictable. One thing that has helped improve my trading on the SPY massively is identifying and comparing it to recent trends on the SPY and also comparing it to the VIX. The VIX is going to help guide you, and it's going to help you see things that you won't see on the SPY, as it's the inverse. And it's really good to pay attention to how VIX reacts at these mini gap levels. I'm seeing mini gap close reversals on the VIX where I'm finding it highly predictable to determine where SPY will move comparing it to the VIX, right? So I'm going to show you how to trade the SPY. I'm going to show you pattern recognition. I'm going to show you some price action trading strategies you can use to profit both ways in terms of today's action and in terms of upcoming trades to be made on the SPY for the rest of the week and into next week. I'm going to show you how to trade the best setups at the best prices. Let's get straight into it, guys. This is going to prepare you to trade for the upcoming week. So in terms of yesterday's video, the main point of yesterday's video that we mainly discussed was there was 2 gaps to fill on SPY. There was a gap to fill at 415.74, and there was a gap to fill at 417.44. And I had stated that, we've been trading in this channel for 8 days, in a row, and we're towards the top of the channel. So if you were to simply just buy calls at the bottom of the channel, which is in the 407s, you had 1, 2, 3, 4 opportunities to buy the bottom. And if you were to just buy puts at the top of the channel, which is in the 415.70s to 417s, 1, 2, 3, 4, 5 opportunities on the puts, you'd be absolutely crushing it. So if you're not making money on the SPY, first of all, you're not trading the best setups at the best prices. And if you're buying calls at the top, you're betting against the overall side of the trend with big downside potential. That's how people lose all their money, by buying into the tops and holding, never hold. I actually scalped a SPY call right here towards the top at 414.70, right after G-Roar bought puts. And I was trading like a sniper. It was a small position size. I was in and out. I didn't alert it within the best price alert section. It was just a quick scalp. I made 10%. As soon as I sold, the puts printed like crazy. I wasn't focused on the bigger side of the move. I was just micro scalping it. But this morning, killer trade on SPY calls. And I'm going to show you how I was able to determine that gap was going to fill. That trade went up 60% in like 5 minutes. Crazy trade. And then after that, I was just aiming for smaller moves while G-Roar was focused on the bigger moves, which is the right thing to focus on. But in terms of my trading, I mainly focus on bigger moves, but I'm seeing some highly predictable small moves on SPY where you can make a quick 10 to 20% return within minutes. And I am going to be willing to trade those, but I'm not going to be alerting them as like the best setups, the best prices, because they're not. But I am willing to trade those, right? So that's something that I'm focusing on too. And I really want to focus on developing, on continuing to master the SPY, because SPY is all you really need to trade. And then as your account grows substantially bigger, there is going to be tax benefits and benefits to trading SPX as well. SPX is going to be a phenomenal option for larger accounts to trade as well. So that's something that I'm going to be focusing on, is just trading SPY full time. In terms of like quick micro scalping opportunities, I'm personally seeing a couple opportunities every single day for quick 10 to 20% returns. In terms of big opportunities where the big wins, the best setups, the best prices, I'm seeing 4 to 5, usually like 3 to 5 opportunities every single week. Obviously, there's going to be a little bit more if you trade it both ways. I mainly focus on the put side, but as of lately, I've been trying to develop more on the call side. But yeah, I'm just really focused and really laser focused and dialed in on the SPY, because I'm seeing the opportunity here. I'm seeing the potential if you can master the SPY. In terms of stocks, I haven't been seeing too many great opportunities on stocks. I've mainly been focused on SPY, because if you just look at this channel, there's just so much money to be made in this channel with calls on the dips and puts on the rips, right? If you were to bet against, if you were to bet against the channel and buy calls on the rip, you would have lost money for the past 8 days. If you were to bet against the channel and buy puts on the dip, you would have lost money for the past 8 days. So like, don't fight the trend, don't fight the channel. Like, yeah, at some point it's going to either break down or break out of this channel, but just focus on what the chart's telling you. So why did I decide to buy SPY call options? Where did I buy the call options? I literally bought the calls right here when it hit 414. 5 minutes later, it exploded up to fill the gap. The calls printed like crazy on this crazy move. They went up 60% very, very quickly. Why did I decide to do that? Pattern recognition, right? So I was using my gap fill strategy. The gap fill strategy basically helps you identify when a gap is going to fill. SPY opened up lower than it previously closed. That means there's going to be a gap waiting to fill above, right? So my job using the gap fill strategy is to determine good entries to be buying and to determine if that gap has the potential of filling. What were some indications that helped me determine that SPY was going to fill the gap, right? Obviously, nothing's going to work 100% of the time, but what did I use to determine that this was going to be a successful gap fill play? I studied the recent trends of the SPY. And if you've been following the recent trends of the SPY within this price channel, right? Every single time SPY has gapped down, here's one example. It gaps down, it rips up and fills the gap, right? Right here, it gaps down. Next day, it fills the gap. Right here, it had a small gap down. It filled the gap. Right here, it had a gap down, which was yesterday. It exploded up in the morning, it filled the gap. And as you can see, history repeated itself just like yesterday, where SPY ripped back up, bottomed on the first 5-minute candle, and filled the gap. So I was saying the probabilities of this gap filling are extremely high, because throughout the past 8 days of this price channel, where SPY has an overreaction and it has a nice gap down in the morning, it tends to explode up to fill the gap the same day. And then of course there's that one time right here where it didn't happen the same day, but the next day it ended up filling. So the probabilities were in my favor in terms of history tends to repeat itself, which it typically does, right? And also the VIX. The VIX told me everything I needed. It was mainly the VIX, guys. If you want to master the SPY, you got to follow the VIX. You got to follow the VIX. Whenever you're watching the SPY, you got to follow the VIX, VXX. Look at this candle. This was the dead giveaway. You tell me, in terms of candles, in terms of history repeating itself, look at the chart on the VIX. Look at this 5-minute candle. This is yesterday at open. As soon as VIX forms this bearish candle at resistance, what does it do? It sells off and it fills the gap that's waiting to fill below. There was a gap to fill below right here, and it went even lower, right? It got absolutely crushed first hour in the morning. And look what happened. It formed the exact same 5-minute candle right here compared to yesterday. And then what did the VIX do? It did the same thing it did yesterday. It sold off hard, it filled the gap, and it went lower. You see how that works? But if you weren't looking at the VIX, and if you weren't paying attention to how VIX reacts when it forms this 5-minute candle and how it looks bearish with this red candle after, and it's just on track to fill the gap below, and it went even lower than the gap yesterday, right? It's the exact repeat, then you probably wouldn't have been too confident in buying SPY calls on the dip this morning. So thanks to the VIX, and thanks to the recent patterns that I've been noticing on the SPY, where it loves to explode up to fill the gap, That's where the trading idea came from and my determination came from in terms of buying the calls on the SPY, right? So also looking at the chart, what was the chart telling me? Well, it was telling me, when this gap down, there was resistance at 414 and it sold off very hard, very quickly to 412.72. This is an overreaction. It's likely going to fill the gap. And once I determine that, okay, this 414 resistance is now reacting as support. It's forming higher support. It's trying to break above this resistance. It's trying to have a gap breakout, which means, once it gaps down and then it goes above this level right here, there's no resistance and it's just going to try to fill the gap. There's no resistance above 414, right? If you look at this chart, there's no resistance. As soon as it turns 414 into support, as soon as it breaks above 414, it's just this empty space in this gap that's waiting to fill above. So once I noticed that it was forming higher support, it was trying to break out, then it was a very ideal opportunity to buy the dip. And that's exactly what I did. This was live on stream. As soon as I got in, 5 minutes later, it exploded up. The calls went up 60% right here. This is where I was selling. I was selling right here into the 415s on this candle. That's where I sold the vast majority of the position for a 40% return within about 5 minutes. Now let's talk about the put side. So I didn't play the put side, and that was the main trade that I had for the day. That was the one that I alerted in terms of best setups at the best prices. I had some small wins, non-directional trading, not at the best prices, just some quick in and out SPY scalps, right? But in terms of directional trading and in terms of big moves, let's talk about that. So we had discussed yesterday that if, the put zone, what was the put zone, right? We discussed 415.74, the previous closing price, the gap to fill above. And we also discussed the best price, which was at this 417 gap, this 417.39, which is still relevant, 417.39. So we had stated that that's the potential zone where if SPY reacts as a resistance level, right here it reacts as a resistance, right here it reacts as a resistance, right here it reacts as a resistance, SPY is going to get crushed and it's going to sell off extremely hard, which is what ended up happening. Now, was this predictable? Right? Let's look at the chart. What is the chart telling us? The chart's telling us, wow, SPY had a massive gap down and then it had an overreaction. It went from 412.70s all the way to 415.75 rapidly, very quickly. What do I tell you guys all the time? When stocks have overreactions in the morning, they typically have short-term reversals at 9:50 a.m. This is what we call an overreaction. This is an overreaction in terms of a sell-off where SPY is likely to shoot up to fill the gap, but it happens so quickly and it's a strong resistance channel for the past 8 days where SPY is likely going to have a short-term reversal once it fills the gap, and it's at that key 9:50 a.m. reversal time. So was there an opportunity to play puts here? Yes, there was. It started selling off. It formed lower highs right here in terms of opportunity. The lower highs forming in the 415s. I didn't play puts. I stayed away. One thing I noticed is, so I typically do puts. As I was playing calls today, I was mainly just focused on calls. I wasn't in terms of extremely adaptable today, and I was more hesitant on the put side. And I think that was because I was just mainly focused on buying the calls. But one thing I did recognize is I recognized exactly where to lock in my profits. So in a sense, did I follow the analysis? Did I follow the video from yesterday? Yes, because I was selling my calls. Whenever I bought them, I was selling in the 415s. And I was trying to get in good entries, right? And with that being said, there was 2 opportunities where you could have played puts. In terms of put opportunities, I'm going to draw some ovals. These were some recognizable opportunities. So it fills the gap. It sells off hard. It forms the lower highs. There's an opportunity to play puts right here. In terms of best highly predictable opportunities, look at what SPY is doing. It rapidly sells off almost to the lows, and then it rips back up, but it's forming lower highs. And then right here, the 5-minute chart, this is where G-Roar ended up picking up his puts. The 5-minute chart became very bearish on this retest here. You had a retest here. You had a sell-off almost to low of day here. You had lower highs right here, all bearish confirmations. And if you just look at this 5-minute chart, if we just zoom out here and just look at this 5-day 5-minute chart, it literally looks just like it does right here when it was trading in the 415s. It just crumbles. It crumbles. Resistance in the middle, right? It forms like this M pattern. And then once this 5-minute candle comes in, this very bearish 5-minute candle right here, you could see a very similar candlestick right here. You can see, look at this candle right here, this candle right here towards the top, this candle right here towards the previous closing price at the top. As soon as that candle forms, massive sell-off, massive sell-off. So the 5-day, 5-minute chart gave it away in terms of confirmations. And in a sense, it's just a no-brainer to attempt to play puts in the 415.70s because it already hit 415.70s and it sold off rapidly to the low of day. And it started forming lower highs. And right here on the 5-minute chart, when it hit it, this is a very bearish confirmation. This is a very bearish confirmation. Lower highs, as soon as it cracks this support at 414.50, it free falls to right here, which is 413.50s. If it cracks the low, then it just gets demolished. And then when it rips back up and cracks the low, you could see that the opportunities, it's like an exact identical chart in terms of put opportunities. So I would say the most highly predictable put opportunity and the best one was the one that G-Roar played. He played it super smart. He waited and he identified, it's having a gap close reversal. It had a hard rejection in the morning. It tried to form lower highs. Very bearish candle on the 5-minute. Very bearish candle on the 5-minute here. Same candle. Rapid sell-off, rapid sell-off. And then, of course, he also uses, he uses what he uses for price action analysis. And he uses the VIX and he uses the VWAP. He does different things as well. It's not just everything that I teach. He does his own thing as well and combines it all together. But it was pretty obvious. It was fairly obvious right here. And I actually scalped the call. I scalped the quick call. I knew it wasn't a great setup. I knew it was a terrible price. I always tell you guys focus on the dips, not the rips. It was a stupid trade. I got in at 414.70. It popped to 415.10. I got out instantly within like 2 minutes, made a 10% return. And then I honestly thought about buying puts. I hesitated, waited a little bit too long, and then it just sold off hard. I don't have to nail it both ways, but I do have to get that better entry if I'm going to continue to trade. But I recognize it wasn't a good entry, and I took a very small size, and I got out as soon as it hit 415s. Like I said, I was selling all my calls in the 415s. But with that being said, I should have been more laser focused in hindsight on the big side of the move. I was focused on the big side of the move right here, but I was not focused on the big side of the move right here. I was too busy distracted with in and out, very super small win scalps from there. I should have been more focused on the directional side of trading, the more bigger side of the move on the trading, right? In the morning, I was on the right side, but then from there, I was just taking very quick in and out scalps that worked and that made me, some small gains, but I should have been more focused on the bigger side of the move, the overall trend direction, right? It happens, but I don't have to trade it perfectly every single time as long as I understand that, it's not a good entry, get in, get out, do my thing. Like those are just small trades, small wins. But I want to give a big shout out to G-War because he absolutely killed that trade and he played SPX, not the SPY. And in terms of XPX, those puts that he bought, I think they went from $480 to like $2,800. He absolutely killed it, man. Like that was a banger trade, one of the best trades by far for the week. So yeah, that was kind of the recap on SPY and how that was obvious in a sense. And in terms of whether any more put opportunities, I would say there's one more put opportunity. You can see right here, rapid sell-off, bounces back to the morning low, reacts as a resistance, sells off hard again. Right here, rapid sell-off, bounces back to the morning low, reacts as a resistance level, rapid sell-off. There was one more opportunity, I'd say, where you can play puts, obviously not the best price, but there was a key breakdown opportunity. If you see that opportunity where it cracks a key support and then it rips back up, reacts as a resistance, you could play puts there. Always make sure you scale in with, smaller light size. But at the end of the day, guys, you need to focus on trading the best setups at the best prices. I mean, just look at this channel, right? Instead of trying to predict that, is this going to be a breakout? Is SPY going to break out above 417 and then fill the gap at 429? Or is it going to be a breakdown where is SPY going to crack this 407 and then fill the gaps at 397, right? Instead of trying to do that, like just really focus on what the channel is saying. The channel is saying the best price to buy calls is in the 407s. The best price to buy puts is in the 415.70s to 417s, right? If you were to do that, say you bought puts right here, that's one opportunity for puts, 2 opportunities for puts, 3 opportunities for puts, 4 opportunities for puts within the past 8 days where you buy at the top and make a substantial return, you would have made money. And then same thing with the calls. 1, 2, 3, 4 opportunities to buy the calls at the best prices. Like if you're not making money on SPY, you guys, especially within these past 8 days, I just don't understand. Like I really don't understand. Like this is extremely predictable. I didn't play it amazingly. I could have done such better, but the portfolio is up 70% within the past week. And all I've really been trading is SPY. And I've been killing the SPY, trading it like a sniper, had a lot of nice smaller wins. And then I had some big moves. I mean, this morning, that was a big move to fill the gap. Obviously, the puts was way better, but this was a fairly decent move where this just substantially ripped up within 17 minutes. So I did have that. But I do regret not being laser focused on the potential reversal, especially after this 5 minute bearish candle came in. I do regret not being, not being extremely short biased and bearish here. I do regret that. But at the end of the day, I sold my calls at 415. It was just a quick scalp, like small win after that. And I did the right thing by getting out. I just wish I would have been more focused on the bigger side of the trade instead of these small sniper scalps later into the day. But it is what it is. At the end of the day, you get what you focus on. If you focus on, so like G-Roy, he says he focuses on the big trades. And that's typically what I like doing. The big trades, the big wins. So what are the big trades? What are the big wins? Calls at 407, puts at 415.70 to 417.44. Puts at the top, calls at the bottom, nothing in between. Those are the big potential trades, right? In terms of like sniper scalps, you're in, you're out, rapid, quickly, much smaller gains. You don't hold them long. They're not the best prices. They're not meant to be held. Do you guys really think buying a call at 414 to 415s towards the top of this channel is meant to be held very, very long? No, because if it reacts as a fake out, it's gonna fall off a fucking cliff. Like you don't hold these options very long. Now, if you trade them at the best prices, yeah, you can hold them a little bit longer, but of course you want to take profits along the way. I mean, you just gotta ask yourself at the end of the day, is this trade meant to be in my favor? If I buy calls at the top, right? Is that meant to be in my favor? The probabilities say no, because it's been crashing every single time at 415 to 417s. At some point, it's going to break out, but it's like you're literally trying to predict something that hasn't occurred. If you were to try to predict something that hasn't occurred, you would have lost every single time for the past like 8 days. And the same thing goes for the put side. If you were to try to predict a key breakdown at 407 that hasn't occurred, we lost every single time. It's like, focus on the big side of the move. What is the chart saying? What is the big side of the move saying? It's saying every single time this fills a gap towards 415s to 417s, it gets absolutely crushed. Every time it hits the dip at 407s, it gets absolutely, it rips, right? And why would you even want to focus on like buying a call in the 415s towards the top, hoping for a breakout? It's like we're in a macro bearish sediment. Now, if you just understand that, okay, it's going to be a small gain. I'm going to trade this like a sniper. I'm going to get in, I'm going to get out, small size, then that's completely fine. But just remember, you get what you focus on. If you focus on the big moves, you get the big moves. If you focus on both, small moves and big moves, that can complicate your trading. And that's something that ended up occurring with this trade. I was tempted to get puts, but I hesitated. And one of the reasons why I hesitated is I was so focused on buying calls. And I recognized that my trades into the day, my mini micro scalps, my small wins, weren't that great of a trade, So it kind of put me in this position where I kind of just need to stop. I just need to chill. Like I just need to stop, trading in terms of the day, right? So you get what you focus on. If you focus on small wins, if you focus on trading not the best levels, then you're going to get those results. And what are those results? The chart is going to show you what those results are. The option contracts are going to show you what those results are. If you're holding same day expirations at these terrible entries, you're always going to lose. Like put your odds where the probabilities are, where the history is showing you what's going to be within your favor, right? So I just wanted to make that very clear. And this was pretty obvious. And there's reasons why I sold my calls in the 415s because it looked obvious and I followed my video in a sense. But I am disappointed that I missed out on the bigger side of the movement. Like I said, I missed out on it because I was focused on trading like a sniper, just smaller wins. After I had this big win, I was just focused on smaller wins. It was looking bullish at the time, but I wasn't focused on that overall direction. I wasn't focused on that overall chart. So yeah, but I did a good job of adapting and getting out. That's one thing I did extremely right. But at the end of the day, guys, especially if your account's small, just focus on the big moves. If you have a bigger account, you have a lot of experience, you know what you're doing, then you could focus on both if you want. But if you focus on both, those are two different trading styles, so you got to understand that can complicate and that can, cause you to make mistakes. You really got to be in the super right headspace to really do that. You really got to be on point. And it can complicate things, going from trading like a small win scalper to aiming for a big win, because it's like two different mindsets, two different trading strategies, two different ways to go about it. And it can complicate things. And that's what happened towards the end of the day in terms of my situation. But regardless, phenomenal day, 11.75% return on the day. in terms of SPY and what are going to be the best levels to be buying the SPY options heading into tomorrow. We are on track to gap down. With that being said, what I want you to focus on in terms of this gap down, it closed at 411.22 and right now it's at 410.80. So if we do gap down, we are likely going to fill the gap. If not tomorrow, then by Friday, it's likely going to fill. So if this opens up lower than 411.22, I can see it going back to 411.22. If not tomorrow, then by Friday, I can see that happen. What are the best prices to be buying the calls? I want you to focus on the low end of the channel. Focus on this 407, 408 range, 407 range, this 407-ish range to 408 range for potential calls. If it looks bullish, if it gaps down in the morning, you could try to play calls towards the low end of the channel. If it doesn't work tomorrow, it should work on Friday. In terms of puts, I want you to focus on the best price, 415.70s to 417s. If you see it react as a resistance towards there, then the puts will continue to print, right? So just focus on trading the channel. Keep it very simple. If those levels that I gave you don't hit, then I would just kind of avoid it. Just know whenever SPY's been gapping down on this channel, it likes to rip back up, usually as of lately, the same day. But there has been occurrences where right here on that one time, it didn't fill the gap the same day, but next day it exploded up to fill it. So either way, I think it's going to fill the gap. I don't think we're just going to snap out of this channel and crack below 405 into this week. I think we're due for some sort of bounce, but first I want to see some sort of pullback, some sort of nice gap down before considering buying calls again. So wait for the lower end of the channel for calls. For puts, I'm going to sit on the sidelines. This is due for a little bit more downside, so hopefully it gaps down. Hopefully we get a nice little morning panic and then an opportunity to buy the calls like we did for the past 2 days. That's my thoughts. That's my analysis. I'm waiting for an opportunity to buy calls on SPY towards the dip in the 407s. That's going to be the game plan from here. The best price for calls is 405.30. That's one of the best ones. If it doesn't hold up there, then I'll be waiting for $397. Like I said, I don't hold these. I get out extremely quickly, right? So in terms of my losses, I sell fast, super fast, like 20% fast. I'm trading a same day expiration, small move against me, down 20%, boom, out like a light, just out like that. Now, in terms of wins, I try my best to let my wins run. I did a very good job of letting my win run, making a 40% return, right? And that was a phenomenal trading opportunity. And, to trade same day expirations, the timing has to be on point. The entry has to be extremely on point, right? So if you don't have the best entry, your timing has to be 100% perfect. If you have the best entry, your timing doesn't have to be the best, but it has to be good, right? So for most people, I would just recommend just focusing on the best entry. At the end of the day, though, I focus on both. I focus on timing and the best entry. Now, I do put timing first. I always try my best to put timing first, but you really want to focus on having that best entry as well. If you have the timing down to a T and you're always timing perfectly, you technically don't need the best entry. But if you're just not getting your timing right, then you're really going to need the best entry. It's ideal to have both. So it's just a lot easier to always focus on the best entry rather than trying to time it perfectly. But I use confirmations where I aim for both. So basically what I'm telling you is when I aim small, I'm aiming for timing. I'm aiming to time the trade perfectly, not getting in at the absolute best price. I'm aiming to time that trade perfectly. Those are my small wins. In terms of my big wins, my big moves, I'm aiming for the best price and I'm trying my best to time that perfectly at the best price. But at the end of the day, if I'm aiming for a big one-sided directional move, I'm aiming for the best price and I'll try my best to wait for the confirmations to time it perfectly. But for big one-sided directional moves, what I can tell you is aim for the best price. If you're aiming for a super small scalp in and out and you're not very good, do both. Get the best price and then aim for that like quick win where you try to time it. Now, if you're more professional, you're more advanced and you want to aim for some smaller wins at the quick scalps, not 100% the best price, you're going to need timing. You're going to need that timing, right? So, those were some ways on how I was able to time it perfectly with the morning scalp. The VIX was the way, man. I was able to time it so perfectly because I looked at the 5-day chart and I'm saying, wow, VIX gapped up. It forms this 5-minute bearish candle, It fills the gap, sells off hard, fills the gap, sells off hard. Exact repeat of yesterday. Same thing with SPY. SPY did the exact same thing. Rallied up to fill the gap, So, That's my thoughts. That's my analysis heading into the rest of this week. I will keep you guys updated. If you do want to be a part of Traders Society, that's going to be that first link down below in the description where you get lifetime access for a one-time fee to the chat room, to the Discord, to the moderators within the Discord. You can ask us friends. You can send us questions as well. But most importantly, you get access to a live trading stream where you get to watch me trade live every single day at market open. I'm trading live every single day. You would have watched me trade this live on stream where I sold for a 40% return on the SPY calls today. And it was a great live trading stream. You get to watch that every single day live at market open. That's where you get to see me trade live in action. You can also ask me questions live on spot. But that's that main purpose of the program, is to see how I trade live so you can learn from it. And you can also watch the recordings. When the stream's over, you get access to the recordings. You can go back and watch them. It's not meant for you to blindly follow my alerts. It's meant to show you how I trade my plans live in real time, the mistakes I make in real time. How I identify price action, the confirmations I'm using, the timing I'm using. It walks you through all of that live trading on stream, not this hindsight, not these trading plans, not these recaps, but an actual live trading session, right? Most people don't do that. I mean, there's a lot of people alerting in Discord telling you to follow their alerts. Good luck with that. I don't recommend that. I do post my alerts in real time on my Discord, not for people to follow, just so they can see what it is I'm doing in real time. But in terms of education, the best education you can really get if you're going to follow someone else is to see what is that they're doing live on stream in real time. And that's what I offer within Trader Society. You do also get access to the video lesson library. Within the video lesson library, that's where you get to learn all of the gap trading strategies, the price action trading strategies, risk management, position sizing, psychology, and mindset to trading. There's so much more to it. If you want to check it out, it's the first link down below in the description. As soon as you sign up, you get instant access to everything stated on the page. You can trade live with us as soon as tomorrow at market open, right? So I will see you guys within the live trading stream tomorrow at market open, and peace.